What's up, guys? In today's video, I'm going to be comparing the ARK Innovation Fund with the SCHD ETF. So let's get right into this. As you can see, my portfolio passive income, I'm at $51,186.50. All time, my market gain is a loss of $361.22, but I have those awesome earned dividends at $5,085.89. And since we're talking about SCHD and I own the stock, let's check it out. I have $14,546.20 in SCHD. I've lost $288.90. However, I've earned $154.20 in dividends. And I believe this month of June, I'll receive well over $100 in dividends. I'm excited to see exactly how much money I make from SCHD this month because I've more than doubled my position. We click on this. You can see I have 202 shares, well, 202.283 at an average price of $73.34. And right now, SCHD has a pretty awesome dividend yield at 3.68%. So let's go into ARK Innovation on Seeking Alpha. It's currently trading at $42.68. Year to date, this is up 40.12%, which is insane. That is a lot of growth. And then we have an expense ratio pretty high, 0.75%. And then I wanted to look at the dividend, but currently ARK doesn't have a dividend. And I could have sworn that they did have a dividend. However, I want to show you one of the reasons why ARK is up 40.12%. But first, I actually wanted to show you that even though it's up so much, if we go to its peak, it's still worth less than 1/3 of its all-time high, which is pretty insane to think about, that you can be up 40% and still be down like 70% from your all-time high. So next, this is the reason why I believe ARK is up so much. As you can see, Tesla has gone from what, $108.10 at the beginning of the year all the way to $234.86. Tesla is up 117.26%. That just doesn't make any sense. That's insane. And even with Tesla, if you look at that, even with that huge increase, it's still just barely over 50% of its all-time high. That is even more ridiculous, how you can go up 100% and still be down so much. Well, let's look at the ARK Innovation ETF fact sheet as of March 31st. And I know that's been 3 months, but the SCHD fact sheet I'm going to be looking at is also from March 31st. All right, so why would you want to invest in ARK? I don't know, but let's find out from them. It says exposure to innovation. They aim for thematic, multi-cap exposure to innovation across sectors. ARK believes the securities held in ARK present the best risk-reward opportunities from ARK's innovation-based themes. Growth potential. It aims to capture long-term growth with low correlation on relative returns to traditional growth strategies and negative correlation to value strategies. It is a tool for diversification. It offers a tool for diversification due to a little overlap with traditional indices. It can be a complement to traditional value/growth strategies. It's grounded in research. It combines top-down and bottom-up research in its portfolio management to identify innovative companies and convergence across markets, and cost-effective, provides a lower cost alternative to mutual funds with true active management and an exchange traded fund that invests in rapidly moving themes. So yes, while it is lower cost than mutual funds, as we saw from the expense ratio before, 0.75% is a lot. And if we also look down here, you can see their number of holdings is about anywhere from 35 to 55. And I made a video about ARK last year. And if I remember, I wanted to say two-thirds of the companies didn't produce revenue, positive revenue. They were burning money. So let's look at their objective. Try not to look at this graph to the left, but let's focus over here on fund objective. ARK is an actively managed ETF that seeks long-term growth of capital. It seeks to achieve this investment objective by investing under normal second circumstances, primarily at least 65% of its assets in domestic and foreign equity securities of companies that are relevant to ARK's investment theme of disruptive innovation. ARK defines disruptive innovation as the introduction of a technologically enabled new product or service that potentially changes the way the world works. So if we look at their top 10 holdings, you can see Tesla makes up 10.4%. That's where I think a lot of their gains from this year have come from. You see Zoom at 8.1%. So when we look at, this is just my opinion, when we look at disruptive, like Zoom video, even though I'm using it to film this video right now, there are so many companies that do the exact same thing as Zoom. Like you have Slack, Microsoft Teams, you can do FaceTime for conferences. There's so many companies just like Zoom. Roku, another one, 7.8%. You know, to me, Roku's just a fancy remote, and I have a smart TV, so I don't even need Roku. It has everything on it from HBO Max to YouTube to Netflix and so on. Next, we have Coinbase Global, which is at 6.7%. I mean, I believe they're in legal trouble right now. So, most of these crypto companies have been in legal trouble. So that doesn't really sound disruptive or innovative to me. We have Exact Sciences Corp. Not sure what that is, but it's 6.2%. Then you have Block Inc. at 6.1%. UiPath at 6%. Shopify at 5.6%. Shopify, I think they're cool. Teladoc Health at 4%, and then DraftKings at 3.9%. And just these top 10 holdings make up almost two-thirds at 64.7%. So next we can just look at their sector breakdown. Information technology, 30.1%, healthcare, 26.4%, financials, 15.2%, consumer discretionary, 14.9%, consumer services, 11.5%, and the materials, 1.8%. So that is the rundown on ARK. Let's go ahead and shift over to SCHD, which is the Schwab US Dividend Equity ETF, currently trading $71.91. Year to date, it's down 4.68%. And this is the second straight year that it's been down. Hopefully, SCHD can pick up. However, at the end of the day, even if they end up negative, I'm still throwing all my money into SCHD, and I will show you why in just a second. Let's look at their expense ratio, 0.06%. So I want to say that's like 12 times less than ARK, if I got my math correct, which in a lot of my videos, as you guys have pointed out, my math has been wrong, but usually the math is wrong to our benefit. However, anyways, they have a dividend yield at 3.68%. And if we go to the dividends, you can see they have this insane 5-year growth rate of 15.56%. I don't know how long SCHD can sustain this, but I would be excited even with 8%. But let's keep it up as high as we can. So this is what I was telling you guys about a minute ago. Even though SCHD is down on the year, that growth rate is undeniable. 15.56%. That is wild. That is so. I believe the reason SCHD is down because right now you can put cash into a bank and get 4.5 to 5% on just your liquid cash sitting in a bank. And then, of course, you have treasury yields, which are high right now. In fact, even M1 Finance gives 5% on your 5% cash, 5% yield on your cash if you put it in M1 Finance. But so a lot of people are buying these, treasury bonds, putting their money, their cash in the bank, or just, buying other safe assets, putting their money into CDs, which is actually probably viable right now with interest rates so high. So a lot of people don't understand that, yeah, it's safer. But for me, I'm putting my money into SCHD because a 3.68% yield is fantastic. And when you just pair it with this amazing growth rate, I see no point to hold extra cash in the bank or in a treasury or anything else because if interest rates fall, which eventually they most likely will, so will your return on that cash. So I would just recommend if you're going to hold cash, just the emergency fund. But that's what I would do. So not financial advice, right? So let's look at SCHD's fact sheet. As you can see from March 31st of 2023. So SCHD, their objective is to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. Their highlights, it's straightforward, low cost fund offering, potential tax efficiency. The fund can serve as part of the core or complement in a diversified portfolio. SCHD used to complement my portfolio. Now I'm making it my core. And it tracks an index focused on quality and sustainability of dividends. So that's very important. It invests in stocks selected for fundamental strength relative to their peers based on financial ratios. As you can see, they hold about 102 stocks, pay their dividend quarterly. And if we scroll down, you can see their sector weighting, 17.8% in industrials, 16.3% in health, 14.1% in financials, 13.3% in consumer staples, 12.5% in information technology, 9.3% in energy, 8.1% in consumer discretionary, 4.9% in communication services, 3.4% in materials, and 0.3% in utilities. And their top 10 holdings are all great companies. You've got AbbVie and Cisco at the top. Then you've got Texas Instruments at 4.21, Pepsi and UPS at 4.2, Verizon at 4.14, Coca-Cola at 4.12, Pfizer at 4.06, Broadcom, which is a stock that has double the dividend growth rate of SCHD, almost. That's at 4.05%. And then you have Home Depot at 4.04%. And those are a total of 41.52%. So all great stocks right there in that top 10. I wish they would own Costco just because Costco has an insane dividend growth rate. But, you know, maybe one day. All right, so now we have the back test. We have $100,000, reinvest dividends, display income, and then we have SCHD and ARK both at 100%. And I already hit analyze. So let's look at the data, what happened. So starting from just January 1st of 2015, with an initial balance of 100,000, SCHD wins with $226,547. ARK is at $220,830. SCHD's best year is 29.87%. ARK is like 5 times more than that at 152.82%. However, SCHD's worst year is 7.09%. And then ARK's worst year is 66.97%. Absolutely insane. So, I mean, as you can see, at the beginning of 2021, ARK was over triple. SCHD, ARK at 743,386, SCHD at $192,274. Now, if you bought ARK at a low value and sold it around this December to February, even March area, well, I would say even all the way to June 2021, or maybe we can even go to October of 21, I would say you're a genius, you know. But if you held on to ARK through all those years, you are losing out to the slow and steady SCHD. Even if SCHD is only up a little bit, like $6,000, we're going to scroll down to the dividends and show you the real difference in these two stocks. So in 2015, you can see SCHD, they paid more dividends at $2,910. ARK was at $2,307. And if you look at 2016, no income from ARK. However, SCHD has increased their income. Next, in 2017, ARK brought their dividend back, but SCHD increased theirs and is still ahead. Now, in 2018, we have ARK outpacing SCHD. However, SCHD is still increasing their dividend. And in 2019, ARK had a significantly lower dividend. 2020, ARK paid a huge dividend. However, as you can see, no matter what, SCHD is just continuing to steadily grow their dividend. ARK didn't pay one in 2022. And I would believe with the current interest rate environment, ARK is most likely not going to pay a dividend in 2023. So at the end of the day, in my opinion, I would pick SCHD for the just consistent growth that, right now SCHD is underperforming the S&P 500, but it's not by an insane amount. And when you just look at that 15% dividend growth rate, it's really hard to say no to SCHD. In fact, for me, it's impossible. So you guys can let me know your opinion. I'm going to continue throwing all my money into SCHD. I still believe in this ETF, even though people are throwing their money into bonds, treasuries, CDs, cash, whatever. When and if interest rates drop, I believe they're going right back into quality dividend stocks and dividend ETFs like SCHD.